Alrighty, we're good. Hi, my name is Raul Richardson, and with me is Carl Worden, my trusted friend and business partner in scenarios where I have a client that's on the fence that perhaps may be interested in trading, moving out of the business of apartments and perhaps investing in other alternative investment vehicles. Carl Worden is it's on the 9th floor of the Tisch building, right behind Santana Row. He'd be eager to meet you here at the offices or perhaps somewhere at the Capitol Club or somewhere in the area of Silicon Valley. Carl?
Hi, yeah, Carl Worden here. I'm a tax deferral consultant. Actually, I wear many hats. I'm also a financial advisor. I happen to be a real estate investor as well. I have been for 27 years. I happen to represent a 1031 exchange accommodation service and also a company called the Estate Planning Team. What I am for a lot of real estate investors is kind of a one-stop shop. Many clients of mine are looking for a lot of answers, and without knowing where to go, they typically will choose something like their CPA, and they'll go to their CPA for some answers. They'll go to their tax attorney for some answers. They'll go to their financial advisor for some answers. They'll go to the 1031 exchange accommodator for some answers. They'll go to their real estate agent for some answers. And they try to put all that up together. And it's fairly difficult. The purpose I can serve is that I can effectively be all of those. One thing I'd like to comment on those, I'm not a CPA. I am a tax deferral consultant, and there's quite a bit of a difference there. What I can do, though, is I can point you in the right direction, or point my clients really in the right direction in terms of what questions to ask, and help them with their real estate transactions and give them guidance.
Carl, in the event that I bring to you someone who's tired of what I call the 6 T's, tenants, toilets, taxes, trash, termites, and turnover, and I bring them to you, and what kind of alternatives can you give them in terms of like potentials?
There's many things. Ultimately, whether you're 1031 exchanging to go into another property on your own, or ultimately you want to get out altogether and basically cash out and keep all of the money working for you and your family. We have many strategies to choose from. On the side of actually cashing out, I get the question asked a lot. What can I ultimately invest my money into? And the answer is, what do you like? And if they don't know what they like, or if they do, then I can undoubtedly get it for them. In the event that they don't know what they like, that's where the financial advisor in me comes out, and I will ultimately end up helping them pick a series of investments that will make the money last forever.
Which brings me to a good point.
Ideally.
This brings me to a good point. Carl and I did a transaction where we represented a seller who had owned their unit for over 20 years in Mountain View. He was tired of those 6 T's, and he wanted to cash out. What did he do? And what is he doing now?
Yeah, and I'd like to add too that the biggest thing for him is he didn't really realize or take into account this concept called cash on cash return. Cash on cash return is, of course, net income divided by equity, and that particular calculation actually shows you really what your equity is paying you as a rate of return. And for that particular individual, it was a 1.36% rate of return. That was an eye-opener, especially for the wife, because they hadn't really thought of it that way. It'd be like you taking any dollar amount, putting it into an investment portfolio. Let's just say you brought the money to me and said, "Hey, Carl, what can you do for me?" And I put out this portfolio and explained all the different options and choices, and you said, "Well, this all looks great, but what's my rate of return?" And if my answer was 1.36%, would you do business with me? Probably not.
Most likely not.
And yet that's the investment that they had. So what we were actually able to get them into was actually triple net type properties, along with multifamily properties. And we took their income from 1.36% to about 5.5% to 6%, which was a substantial improvement.
And no worries with tenants or
They didn't have
increasing
to-
rents or
They
anything.
don't have to manage the property or anything.
Hands
It's
off.
just everything hands off. Yeah, you go from active management to passive management. It's not for everybody, but a lot of people are gravitating in that direction, and we have many of those things available.
Well, I appreciate your time, Carl,
Mm-hmm.
and I welcome you to visit one of our workshops that we'll be holding. We'll be holding a series of workshops this year, typically one in the weekend and one during the weekday. And if you'd like to learn more about it, but we certainly welcome to have you at the workshop.
That's great.
Thank you, Carl.
Welcome.
We'll talk to you soon.
You can edit this too. We didn't really talk too much about the deferred sales trust.